Wonderful good day, ladies and gentlemen, and Commodity TV out of our studios today here in Munich. And with me here is Caledonia Mining. You remember the miner we discovered at Mines and Money show last year in December in London. A miner, producing gold out of Zimbabwe, actually, in Africa. And with me here is Mark Learmonth, the Vice President of Corporate Development. Mark, thanks for taking the time.
Morning.
Good morning. I said it already. You are a junior gold producer in Zimbabwe. Just give us a short overview. Why Zimbabwe? What are you doing there?
Well, we're a single mine operation in Zimbabwe, relatively deep level, down to 750 meters, although that's not that challenging. Last year we produced about 45,500 ounces, slightly ahead of guidance of 44,000 ounces. And we believe we're probably the lowest cost gold producer in Africa. We've got an all-in cost that's below $1,000 an ounce, and the on-mine cash cost is about $600 an ounce. So it's a very low cash cost producer.
Fantastic. So that means you are really profitable, of course. I think you have something like $25 million in the bank, right?
Yeah, we're profitable, cash generative, even though we're still investing to grow the business further. You're quite right. We had $25 million of cash at the end of December, sitting outside Zimbabwe. So, I mean, there's a popular misconception that it's very difficult to get money out of Zimbabwe. That's not true. We've consistently taken money out of Zimbabwe by entirely legitimate and normal means. And yeah, we've got the cash balance out of the country, and given the size of the cash balance, we actually pay a dividend.
Oh, dividend. That's a keyword what Germans and, of course, the Swiss people love. What is the dividend? I think you announced yesterday the dividend.
Well, yeah.
What is the yield on the share price today?
We used to pay annual dividends. In November, we announced a quarterly dividend policy. So we're paying 6 cents for the year 2014, split into 4 dividends of 1.5 cents apiece. That's Canadian cents. The first dividend was paid on the 30th of January this year. And a press release went out this morning notifying the date for the second quarterly payment, which is the 30th of April, with the next dividend date just before Easter. I think it's the 17th of April.
Compared to your profit you are making, what is the share of the dividend you are distributing?
Oh, the dividend's highly conservative. I mean, the total dividend of 6 cents for the year costs us just over $3 million. So that's
for the year?
For the year, $3 million for the year. So that's 8 times covered by the cash in the bank, and it's about 5 times covered by earnings. So it's a conservative dividend because we want to continue to invest to grow the business. But you know, the reason we pay the dividend, and many other mining companies don't pay dividend, it's not just because we've got a lot of cash, we can't think of what else to do with it. We can think of plenty of other things to do with the cash. It's really just to try and get people comfortable with the Zimbabwe risk. We're in Zimbabwe, it's seen to be a high risk environment. And what it means paying a quarterly dividend is every single quarter, every 12 weeks, we send these people checks so that they know we're still existing, they know we're making money, and it just is over time, over a period of quarters, we hope it helps to sort of get people more comfortable with the Zim risk, which means that hopefully the yield should go down, which means the share price should go up.
Yeah.
Currently we're on a yield of 7.5%.
Oh, that's a lot.
Which is very high. You know, sort of higher cost South African gold producers, which arguably are in a higher risk environment, they're trading on 4.5 to 5, 4.5 to 5 times yield. So we think there's plenty of scope, given our growth prospects and our low cash cost, our high cash generation, to get that yield down, which means the share price goes up. Yeah.
Let's talk about your growth prospects. As far as I understand, you are interested to grow organically. Yeah, like last year 45,000 ounces, this year 48,000 ounces. Then you want to give, I think, 52,000 ounces.
That's right.
Like that.
Yeah, we've mapped out an organic growth profile. We targeted 44 last year. We delivered 45. This year we're looking at 48, as you say. 52 in 2015, and then a bigger increase to 76,000, sort of late 2016, early 2017. All internally funded, all from internal reserves and resources. So as mining goes, it's relatively low risk. In addition, we have some brownfield exploration projects in the immediate vicinity of the Blanket mine, which may or may not give rise to additional production. Given the fact we've got cash, we are aware of investment opportunities in Zimbabwe. There's some stuff we would look at. There's some stuff we wouldn't look at. We can be highly selective. And in addition, we will, given the opportunities that we believe are available in sub-Saharan Africa, if any other suitable opportunities come along, we will look at them. but highly selectively. I mean, we're not going to throw our money around.
Yeah, that's a good thing.
But we have to make it work, eh?
Yeah, of course.
We can't sit on $25 million and let it go nowhere. In the context of our market cap, you know, it represents a significant proportion of our market capitalization.
Absolutely. As you grow the business, I would say your costs maybe even stay equal. Maybe they go down a bit. Yeah. But this leads to higher profits. Is there room then to increase the dividend?
Well, let's just explore that.
In the future, of course.
65% of Blanket's on-mine costs are fixed. Okay, so as we increase production to 76,000 ounces, we don't need to take on another mine manager. We don't need to take on more accountants. So those costs will come down. On an all-in cost basis, we don't need more head office people. We actually don't. We'll probably reduce our capex as we increase production. So those costs should come down, and that means you get the benefit of selling more gold at a lower production price, so your cash generation does go up. Clearly, unless we find something else to do with the cash, we will have to continue to grow and increase the dividend over time. Having a quarterly dividend policy is quite nice because it means that you can increase more gradually, rather than sort of big clunky increases. But you know, we'll have to. The other issue that we're aware of is, given some quite extensive research, is that you can't buy a higher share price purely with dividend payments. You've got to make sure that investors are comfortable with the underlying business. At the moment, our underlying business is very strong, but investors are uncomfortable with the Zim environment, and so we have to work to get them comfortable with that before we can. Otherwise, you're just throwing money away.
Yeah, that's right. So I would say it's a mixture of both.
Yeah,
to finally succeed with everything.
Yeah.
Higher dividend and higher share price, that's the best of all worlds.
Yeah.
Let's come to your first quarter. I think you brought out the numbers yesterday. They were, a bit below your expectations,
Yeah, they were
I
below.
think.
Yeah, they were below expectations, but we flagged that very, very clearly in the.
Why was it?
In the quarter four results, which we put out just a week or so ago. The start to every year is always a slow one in sub-Saharan Africa, as workers come back from a relatively long holiday period. That was compounded by us going through some relatively low-grade areas, which we're now addressing with new development to move production to other areas. And we had an issue with the ropes on the main number 4 shaft, which showed signs of early wear and tear. They were South African ropes. We've now replaced those with good German ropes, which were installed 3 weeks ago. But whilst we were waiting for the German ropes to arrive on the boat, it took 3 weeks. We had to reduce the winding speed. So yeah, that did affect production in the first quarter. Although sales weren't affected because we actually had 2,000 ounces of gold brought forward as work in progress from last year. So sales for the quarter are fine, but production was a bit disappointing. But we're very confident we'll catch up for the year.
Yeah, exactly. That's the point. Because
as the development that's ongoing comes into effect, we're very comfortable to do that.
Yeah, and I think the German ropes are even faster than the other ones.
Oh, they're lovely ropes.
Yes. Great. So to put it in a perspective, what do you want to achieve completely for 2014? What is the main goal?
The main goal actually for 2014 is no unfortunate surprises. So deliver on the growth to 48,000. Keep those costs low, $600 an ounce, perhaps even a little bit lower. But just no adverse external political shocks. Just keep it nice and steady. Maintain those dividend payments and allow investors to just get more comfortable with the environment in which we operate. So we just don't want any adverse untoward shocks over the course of the year.
That's good. So to put it that way, you just want to do the job right.
Yep, we want a nice quiet year.
Great, super. Mark, thank you very much for that. Wish you all the best, and hopefully no shocks, nothing happens, and keep on delivering. We are happy to report about it.
Thank you very much.
Thank you. Ladies and gentlemen, that was Mark Learmonth, the Vice President of Corporate Development of Caledonia Mining. You heard it. Well, it is Zimbabwe, it is Africa, but as you heard, it is absolutely manageable. The business there is good, and they have a terrific mine there, not only up and running in a very good shape, and they pay quarterly dividends. This is something what we really like, obviously here in Germany a lot, and with 7.5% of a dividend yield in an almost 0% interest environment, probably it's worth to have a look on that. So thanks for watching Commodity TV. Bye bye.